Hi, friends. So there's so much going on right now and so much chatter in real estate. We're going to do kind of a different kind of property pursuit. It's going to be a little less structured, a little more chaotic, but that's reflective of where we're at right now. So I have a bunch of notes to go over with you guys. And I want to talk about everything from the new Vantage Score announcement that came out yesterday to this buyer's market that we're in, and some advice that sellers really need to hear. Lastly, we'll touch on the July CPI numbers that are coming out on the 15th next week and what that could do to the market. Everything good, Nicole? Cool. Okay, so where to start? Let's start with Vantage Score. So Vantage Score versus FICO. FICO's kind of had a monopoly on the whole mortgage qualifying process. Your FICO score is your credit score, and it determines the interest rate, it determines the loan programs you qualify for. FICO has a major impact on you applying for a mortgage, but also your entire financial picture when you apply for other kinds of loans and debts. Well, Bill Pulte, the head of FHFA, came out yesterday and said that they're going to start accepting Vantage Score. But the thing is he was kind of speaking out of pocket. Like, there's no infrastructure in place. As lenders, we've received no protocol on how this is going to work. It's something that people have been fighting for a lot. People refer to the Vantage Score as your consumer score because it's the score that like Credit Karma uses. Now, if you've ever been in the position of applying for a mortgage or even an auto loan, you've probably run into the fact that the score that you see on our credit report is different than the one you're seeing online in your monitoring service. And that's because there's hundreds of algorithms that make up your credit score, but we only use like 150 of them are approved for mortgage purposes. And we only look at your FICO. Whereas online, when you're using Credit Karma, that's actually using your Vantage Score. And those scores tend to be higher. So there's been a push that why can't mortgage companies use a Vantage Score if it would help borrowers get a better interest rate or qualify for more loan programs, and if it's more indicative of the most recent credit history, which Vantage is also known to pull more recent credit history for borrowers who are trying to populate a credit score, new to having trade lines or credit cards or debt. Vantage will populate a score faster, easier to move the needle on your Vantage Score. So that's why people have been pushing to have it be used for mortgage purposes. But he makes the announcement yesterday, and like I said, it's out of pocket. We don't know how we're using this, in what way it's going to work, what the infrastructure is going to look like. It's good news, but there's more that needs to be put into play before this will actually be into effect. And there's a lot of questions right now on what it's going to work, how it's going to work, and what it's going to look like. So my takeaway here is it's definitely good news, and I think it will help people, more people qualify, and people who do qualify for better terms. I think it's a step in the right direction. We just need to know exactly how it's going to work first, and it's not available today, and that's important for you to know. Now, getting into this whole buyer's market. So here in Reno, the Reno Gazette-Journal just put out an article last week talking about how it's a buyer's market. We touched on this a little bit on the last Property Pursuits where we were saying, we feel that there is a market shift happening. If you missed that one, that episode with Val, you can check it out on YouTube, or it's in the circle too. No, maybe. It's on YouTube. So with this buyer's market, if you can read the headlines, there's a lot of data out there. It's coming from the fact that listings are up and they're sitting for longer. And then Redfin had put out a big show-stopping headline saying there was more listings than active buyers in the market. So that's where all the noise started. But in reality, if you want to really dissect the situation and look at what's happening, the reason we have a buyer's market is because people are freaked out. There's this moment of hesitation where, for sure, people are having a harder time qualifying for a mortgage, so there's less people in the market. People are dealing with job uncertainty. People are dealing with their portfolios being wrecked. But really, the main cause of what we're seeing right now is people are freaking out. There is so much economic uncertainty. The world feels like it's a bit of a dumpster fire, and that's causing a lot of buyers to just pause. My friend, who's a financial advisor, his firm is telling him to expect a major correction in the real estate market because investors like BlackRock, who've been picking up a lot of real estate, are pausing. There's so much to take apart here, and I want to dive into all of it because it's important. But I want you to understand, there's not really any mathematical formula for us seeing that home values are going to go down. We've been talking about this for years where the loan quality is really good. People who own homes right now have proven they can afford those mortgage payments. We're not going to see something like we saw in 2008 with the housing crash because back then the loan quality was trash. And homeowners are sitting on a ton of equity right now. So I don't think we're on the verge of any sort of market crash. We're just seeing a window of opportunity for buyers because not everyone is as active and aggressive and competitive as they have been in recent years. Usually we would say it's not a buyer's market until there's over 6 months inventory sitting on the market. Here in Northern Nevada, depending on the zip code, we're seeing 30 to 45 days of inventory sitting on the market. It's just that for the most recent years, we've seen like 7 days of inventory at a time, maybe 14 days. So to now see 60 days of inventory, well, I don't think I've seen that yet. I've seen 45 days probably most. It feels like a big shift from 7 days, right? And it is giving buyers more negotiating power, and we are seeing more inventory. My clients are able to get their offers accepted with seller concessions to buy down their interest rate permanently or temporarily, or to help them reduce their cash to close, or they're able to get pretty significant price reductions if that's what the best strategy is for them. This moment of pause is not going to last forever because as interest rates come down, we're going to see home values reaccelerate and interest rates will come down. It's what President Trump wants, and he's created enough economic uncertainty now that a recession is imminent, and that will cause interest rates to come down too. When the cost of borrowing comes down, guys, make no mistake, there will be people who want to take advantage of that. That's why recessions create millionaires. It's not rocket science. Now, when we talk about people who are predicting a major market correction and they're saying it's because of investors who won't buy as much real estate, I kind of think this is a toss-up because we've talked about before how it's misleading when people say that institutional investors are taking over the single-family housing stock in this country because in reality, they only own 3 to 5% of all the homes out there. That's correct. Institutional investors literally only own 3 to 5% of the housing stock in our country. So most of the properties owned here are owner occupied or they're owned by mom and pop investors like me who are trying to build a real estate portfolio. But the reason we feel like institutional investors own a lot of the real estate and are trying to turn us into a nation of renters is because in recent years, they've been using huge portions of their funds to buy real estate. So the percentage they own is increasing. It's just going to take time because it was such a small number to start with. There's been a heavy pickup. They're buying a lot of real estate. And now some economists and forecasters are trying to predict that they're going to slow down on buying real estate. Nobody knows for sure if they will do that. But that's really the only factor that could contribute to a market correction because, like I said, all of these people who own their homes have a ton of equity in them. They're not likely going to sell it at a huge loss or just give it back to the bank without thinking twice about it. And I hope that makes sense. So with this window of opportunity that buyers are having, I mentioned that my clients are able to negotiate really good deals. And then in the last week, we saw interest rates start to trend down. I lost the shit. We saw interest rates start to trend down and we saw mortgage applications jump. And it's really interesting when we see the data. Purchase applications are up like 25%. I personally came into the office Monday and thank God for Nicole because if she wasn't here, I'd be dead in a ditch. She pulled in 7 loan applications between on Monday and Tuesday by 10 a.m. Like there's so many people applying and what was interesting, we were talking about last night is they're all serious. Like they send their pay stubs immediately. They had good credit scores. They all qualified. People are coming back to the market because interest rates went from 6.75% to 6.6. So imagine what happens when interest rates go into the 5s, when we hit 5.99. This buyer's market window ends pretty quickly in that scenario. So if you're out there shopping right now, I think it's something you really want to take advantage of is this window of opportunity where you can negotiate a deal. And if interest rates come down further, you already know, if you've been watching this podcast for the last 2 years, you will be able to refinance and take advantage of that. I don't think you have any concern of buying something and the value falling out from under you. Plus, we're going to make sure that you can afford that mortgage payment when we qualify you. So if home appreciation doesn't continue the way it's mathematically forecasted to, it doesn't really mean anything. You just keep making your payment. And then over time, the value of real estate always trends up. Literally, since we've been tracking the value of real estate. Now, what do sellers need to know in this market? This is another important piece of the puzzle here because if you're selling, I don't want you to think that you're at a huge loss. I will tell you this. There are listings that are still going quickly. So how do I know this? Well, right now, my buyers are able to get contingent offers accepted. That's amazing. They haven't had that position for a long time. We had to implement the Home Simple program. We've been using bridge loans. We've been doing whatever we can to help our buyers who want to move up or downsize be able to purchase their next property because nobody was even looking at contingent offers. That's not the case in the last few months. You can get a contingent offer accepted. And being that they needed to sell that house for the new house that they're already in contract for, they were advised to price their house correctly, competitively. And they all got their houses sold. Sometimes in the very first weekend, it was on the market. So I'll tell you this as a seller. Now is not the time to test the market. You don't want to come on high and see if you can get that extra $25,000 because then you're going to sit for a few weeks and then buyers are going to smell blood in the water. But if you price your property competitively, there's a very good chance you're going to get multiple offers and be able to sell that house at terms that you find really attractive. You could win on both sides. You could win on your buy side with negotiating, and you could win with still selling your property quickly. So I don't want sellers to feel like they're completely disadvantaged. Right now, buyers do have more ability to negotiate, and there's no way around that. I'm not going to tiptoe it. I'm not going to sugarcoat it. That's the case. But if you're a seller and you price your property appropriately, and you do the basic things with marketing and hiring a competent realtor and decluttering and presenting the property, making it available for showings, you can sell your house right now. You don't have to feel trapped. That's the truth. So, lastly, July CPI numbers. So, everything has been a crapshoot. Last week, we had jobs numbers, and all week, all the little pre-reports, the little leaked data, ADP numbers, everything came out showing that the jobs report was going to be weak. And I know I sound like a broken record because every Friday on my blog, if you don't get it, you should subscribe. I send out the week's headlines and what's going on and how it's going to impact interest rates. Well, we talk about the jobs report a lot. And it seems like almost every single month we are slapped upside the head with this number that makes no sense, showing huge job growth. That's what we saw last week. The report came out early because of the 4th of July holiday. But even though all the pre-indicators had shown we were going to get a weak number, we still saw a strong jobs number. And bonds kind of gave back some of their gains from the week that we'd seen. It didn't tank interest rates or cause them to go up, but it caused them to falter for a second. So it's hard to say. The reason I tell you about the jobs report as a disclaimer is it's hard to say what's going to happen on this CPI number with inflation next week. Is it going to show that inflation is still heating up? Is it going to show that it's improving? Is it going to be a big fat nothing burger? I don't know. But I will tell you what happens in either scenario. So if this June CPI number comes in and shows that inflation was hotter, we probably will lose some of this momentum we're seeing with interest rates improving because it means that the Fed is unlikely to cut interest rates. If it comes in showing that inflation has cooled or even maybe just stabilized year over year, we see interest rates continue to improve. We see mortgage applications likely continue to increase like they did this week, and we see more competition out there on the market. Also an important message for both buyers and sellers to hear so that you know where things are going. Be prepared for both outcomes. Now, the last bit of advice I want to give everybody is, so a lot of my clients right now are trying to decide, do I pull the trigger on buying a new house or do I try to make the house I'm in now fit my needs better? So I'm telling everyone, because when we're in times of economic uncertainty like this, and I think this is advice that's relevant to sellers too. When we're in times of economic uncertainty like this, you need to go down all paths at the same time. What do I mean by that? If you were considering, for example, the scenario I just gave with either renovating your current house, building an addition, or buying a new one, and I literally have 5 clients in these shoes right now who are trying to figure out what to do. Go down both paths at the same time. Explore all the options on the renovation, talk to a GC, get your bids, talk to the engineer about what's possible for your renovation or your addition. At the same time that you are actively looking in the market and trying to take advantage of this window of opportunity that buyers have. Over the next couple months, I think you will get a very clear answer on what it is you need to do. You'll see that there's going to be inventory that comes on that fits your family's needs, that you could get a deal in your price range that you qualify for, or you'll find that the renovation is more feasible than you thought or personally feels like a better choice. And then if there's a third option, and I hope it's available to you, is you get to keep your departing primary as a rental. We put a HELOC against it for your down payment funds and you buy the new house. And the reason I want this to be your scenario is rates of appreciation that I started this podcast with, for the next year in Northern Nevada, they're expected to be about 4%. The year after that, they jump to like 8 to 9%. All the way to we're looking at 5 years from now, rates of appreciation being upwards of 20% year over year on homes in Northern Nevada. I think this applies to a lot of other markets all over the country, but I haven't pulled the data for you. So if you're listening from somewhere else, you should look up the forecasted rates of appreciation for the next 5 years in your market. But imagine if you owned 2 assets that are worth several $100,000 each that are appreciating at 20% year over year. That's freaking huge, guys. That's the power of real estate investing. So that's all the data I have for you guys today. It's a shorter episode, but that was a lot of information. You can, if you're watching this recording, comment below and let us know what you think about this data, what your strategy is, what you think is going to come out next week on that CPI inflation reading. And then the last thing I want to share is a success story of some clients, because we always like to give you a success story and a pointer. So the success story right now is I had clients who were shopping in Arrow Creek, and that in Northern Nevada is a luxury home. Those are usually priced upwards of $1 million. And there's a lot of inventory in Arrow Creek right now. If you have a listing and you're a realtor watching this, I'm sorry, but there's so much inventory in Arrow Creek. But my clients were able to negotiate to get a $60,000 credit to do a 3-2-1 buy down on an Arrow Creek property. And that's huge, you guys. That saves them like $1,300 a month on their mortgage payment in year 1. It gives them a chance to ease into this new price point on their jumbo loan compared to, you know, a mortgage they had previously at 3% interest for like $400,000. So now is a great time to negotiate your heart's desire if you're a buyer. That's the success story. Hopefully it inspires you. And then the pointer I have for everyone right now is, with the passing of the big, beautiful bill, it is a really good time for you to be informed on what tax deductions you're taking advantage of and which ones you're not. So there's going to be some changes that go into effect, some things that are staying from the Tax Cut and Jobs Act from President Trump's first term. I think it's worthwhile to just have ChatGPT break it down for you, maybe plug in last year's tax return and ask, how can I take advantage of these new tax advantages? Hopefully, it's not only going to benefit the ultra, ultra, ultra rich, and there's something in there that you and I could use to pay the IRS less money every year. That's all I have for you guys today. Thanks for tuning in, and we'll catch you next month. We'll be back to the first Wednesday of every month for Property Pursuits, and hopefully I will have a co-host.